If I take out a loan from my cash value life policy, how does it affect my debt to income ratio, if at all?
It's a good question. So
Do you see investors doing that very frequently?
no,
Okay.
I would say that's a rare. I mean, people, anybody that has cash, right now, if you can pull cash from anywhere, it's a good thing, right? Cash is king. So it would really depend on one of two things, right? One, it would depend on if you're doing a conventional loan or if you're doing an LLC loan. If it's an LLC loan, we don't care. Like, as long as we can source where that money's coming from, we don't use personal assets, we don't use debt to income, or excuse me, we don't use personal income, or we don't use a debt to income ratio on the LLC side of lending. It's all debt service ratio stuff. So on that side of things, you're golden.
Got it.
The only time it would affect you if you're doing a conventional loan would be if you actually took a debt out. For example, let's say you took a loan out against your 401k, right? And you have to pay that back, and usually that happens on your paycheck. So if you're paying back a debt that you took out, then it could potentially affect you. We would just take your monthly payment and add that into your debt to income.
Got it. So I guess the piece to take away from that is if you're doing a commercial loan, and commercial loans don't need to be on commercial assets, guys.
Right.
You can get a LLC loan or a commercial loan. They're synonymous on a single family property.
Sure.
To my understanding, what Jared is saying is if you were to do a commercial loan, then these little weird one-off things about your DTI makes less than no difference
Right.
with what you have going on.
It's more so about where that money came from to buy the property. As long as it's coming from your money, then you're golden.
Jared will take your money whenever you'd like
Yes,
to give it to him.
yes.